Good afternoon and welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and with their market commentator Darren Sinden. Right, we've made it to Friday, Darren. Anything on your mind at the moment apart from the weekend?
Well, as you know, Zach, I'm a bit bearish on gold still, and I also wonder about the level that Chinese equities retreated to again. Both of which look like they could make further significant falls. They'll need catalysts, of course. Who's to say something might not come out over the weekend, so I won't lose too much sleep over it, but I expect them both to move further to the downside. And of course, the other great news was the cricket. So
I haven't been following that. It seems to be quite exciting though. Yeah. Data released over the European session.
A real mixed bag today, and we start with German retail sales for June. The month-on-month figure came in at minus 2.3% against the forecast of plus 0.3% and the prior read of plus 0.4%. So something's gone wrong in the Kingdom of Germany there. Remember that one of the key tenets of what the ECB is trying to do is to stimulate the internal market in the Eurozone, and they're relying on the German consumer and others to drive that growth, but they won't be doing that on that reading. So slightly puzzling as to why it's dipped so much. Obviously retail sales can be a seasonal number, and perhaps we'll give them the benefit of the doubt and assume some seasonality there. Then we had French unemployment numbers for June, rate of 12.7%. Again, this will be disappointing to the ECB and to the French government because the forecast was for 12.3%, and the prior read was 12.5%. So unfortunately, unemployment's climbing again in France. And
it's a very bad rate, double what it should be.
Well, absolutely, yeah. I mean, it's still better than neighbours like Spain, but nonetheless, it's not good. The question, of course, is whether these levels of high unemployment in Europe are structural now, i.e., they're hardwired into the economy, or whether they will come down. We also had French consumer spending data for June. This again is a month-on-month figure. Rose 0.4%, again lower than the forecast rise of plus 0.6%, though better, it must be said, than the very poor plus 0.1% that we saw in May. Nonetheless, an undershoot of 30% in terms of the forecast there. Again, cause for concern, presumably for those in the Elysee Palace. And then a couple of Eurozone numbers, consumer price index for July data. So we're just going to focus here on several of these numbers, but we'll focus here on the core CPI number for July, the year-on-year read, plus 0.9%. That was actually ahead of the forecast of plus 0.8%, which in turn was equal to the prior read of plus 0.8%. So slightly better in terms of inflation in the Eurozone. Though, of course, we did see Spain slipped back into a deflationary number last week. So it's a blended number, obviously, across the Eurozone. Still not exactly knocking the ball out of the park, but it is at least moving in the right direction. What isn't moving, though, and remains very static, is unemployment across the Eurozone as a whole. That figure for July came in at 11.1%. That was bang in line with the forecast, but it's also bang in line with the prior read. So a static employment picture in the Eurozone as a whole, notwithstanding the slightly higher numbers from France.
Okay, let's move on to the European movers.
We stay in France, actually, for our first European mover, and that's BNP Paribas. BNP, the ticker in Paris there, one of the larger French banks. It's posted its best quarterly profits since 2012. The headline numbers were flattered by disposal of a big stake in Klépierre, but it's also fair to say that corporate and investment banking profits rose 26% to just over €1 billion. Should also note that their rivals Natixis posted good numbers after the close yesterday. So it's not just
interesting pattern. These banks seem to be bouncing back, apart from the regulatory fines.
Yeah, regulatory fines and the issues of compliance are still a burden to them, but they do seem to be finding their feet again. The market quite likes what it sees at BNP Paribas, so they're up 2.5% at €59.14. And then one that's had me scratching my head today to some extent, Intercontinental Hotels, ticker IHG in London. £26.64p, down 3% on the day. Now, they had good numbers yesterday, and the FT is adamant this morning that they, as a company, have held preliminary discussions with Starwood Hotels, and there's been much talk of them potentially merging. There was a small piece in some of the trade press talking about the management denying that they'd met with Starwood. But to be fair, it's hard to pin that story down, and the fall is a bit of a mystery. But it seems odd. They should have had good numbers yesterday. There should be the bid talk resurfacing, and the stock should be down. But perhaps it's better to travel to arrive.
Yes, I think there's been a lot. I mean, that's a very old story, so a little bit tired perhaps. And also maybe just flush out a few people before any deal might come ahead.
Well, quite possibly.
Right, next up we have the M&A people.
Okay, well, M&A rumours and movers today. It's more of a sort of a fact rather than a rumour. Antofagasta, ticker ANTO in London, the Serbian-owned Chilean copper mine, £5.55 and a half, down 4.31%. Why? Because oddly, to most people's minds, they've decided to buy a 50% stake in a Chilean copper mine for around $1 billion. It's the Zaldivar mine that's owned by Barrick Gold, has around 2.5 million tonnes of proven reserves. It's got a 14-year lifespan. But look, copper prices down 15.4% year to date. Bank of America Merrill Lynch value the whole of Zaldivar at just $1.3 billion. And so, you know, like most people I've spoken to or read about this today, they believe that Antofagasta will be overpaying. Interesting to note that Antofagasta itself lowered its own full-year copper production guidance recently due to delays in commissioning a mine in Papua New Guinea. So one wonders why they're buying at this particular point in the cycle. The only thing I would say is if you look at the ratio of the Antofagasta share price to copper, they are at historical lows. So that ratio is a historical low, so maybe they think it's the bottom of the cycle, and on that 14-year view they're getting in cheap, but we shall see.
Yes, a bit of a mystery, but at least they're keen in doing something and trying to dig themselves out of trouble, hopefully at the bottom of the market.
Yeah, let's see.
Right, the data points.
Okay, a relatively quiet day in the States today as far as data is concerned. We have got a couple of things to have a look at. So first of all, the Chicago PMI for July, a forecast here of 50, so doing nothing. It reads above 50 per expansion, reads below 50 negative. The prior read was negative at 49.4. To be fair, to give us some context to this, we've been heading lower on this indicator since the autumn of last year. Let's see if we can scrape above that 50 line, but even if it comes in dead at 50, it's hardly inspiring. And then the sort of Marmite indicator of the month, the University of Michigan Consumer Sentiment for July, forecast to come in at 94.1. Prior read was 93.3. I think the key here is that you know, love it or hate it, this indicator, you've got to realise that it's struggling to regain, you know, the Jan 15 highs of around 98.2. So let's see what US consumers think, or at least the 50 or so they question. Yeah. Yeah, it'll give us some clue about the underlying economy, I suppose.
Right, and on to the we'll be looking at the movers and levels.
Yes, indeed. So pre-market movers and levels. We start where we finished. Well, where we left off yesterday, talking about NCR. We said yesterday we thought there'd be some further developments in the potential for a PE takeover story.
You did.
Yes, indeed.
No, I mean, I suppose this is a good example of showing you how there's not M&A rumours always have to be taken with a pinch of salt.
Absolutely. Well, we got some developments, not the ones we were expecting, though. The stock trading $27.60, down 9.15%. One of the private equity groups that was said to be interested, Thoma Bravo, are apparently ending their buyout interest, having only offered market prices to the NCR management, which was no interest to them. More concerning, perhaps, to shareholders is that Jana Partners, the activist hedge fund that was meant to be driving this process, said to have sold its entire stake in NCR. They had 9%.
Bit of a car crash in on that.
Yeah, potentially, yeah. I'm not sure that they've actually got rid of the whole lot yet, but presumably they're looking for a quick exit. The only question is, where will that 9% stake end up? So the story might not be over completely, but yes, burnt fingers for some.
Rocky ride.
Yes, indeed. And then something that's going the other way, Expedia, ticker EXPE in the US. This is the online travel company, of course, trading $116.50 pre-market, up 8.26%. And nothing too complicated about this. A good old-fashioned earnings beat. They beat by 5%. It's around 7 cents. So they posted 89 cents for Q2 versus the expectation of 84. So if you please the market, you will be rewarded, it seems. And there's a good case in point.
Okay.
And in terms of levels to watch today, Not too much action as far as European equities are concerned, but in terms of the FTSE, we just tightened the range slightly. So 6630 now is our downside, plays 6700 to the upside. For the DAX, similarly a 70-point range now, 11,230 we've nominated as our downside level, plays 11,300 to the upside. The S&P 2094 on the downside, plays 2115 to the upside, and for the Dow 17,630 on the downside, plays 17,790.
Relatively quiet.
Yeah, it is really. I don't think there's too much in the way of fireworks like to happen this afternoon. Currency wise, not too much movement either. Euro dollar now 109.44 our downside level, plays 109.90 on the upside. The one I would keep a close eye on, Aussie dollar, US dollar, 72.20 is our downside level, plays 72.65 on the upside. If it breaks this 72.20 level, then we could be back to multi-year lows. Dollar yen 124.00 on the downside, plays 124.52 on the upside. And cable, some funny price action this morning. Not sure what that was all about, but 155.40 now, plays 155.85 on the upside.
So lost the 156 level quite quickly and quite strangely, yes. Okay, well that's it for today and this week's Wall Street Crossover Show. We'll be back on Monday, and I hope you can join us then.